This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Wednesday morning, middle of the week, and what a last 2 days we've had. 20,000 on the Nifty, and then yesterday. So quite a lot to discuss and kind of take forward from where we left off yesterday. Guys, morning.
Hi, good morning. Morning. I'm trying my best with this, green shirt so that, the market can sort of perk up its mood. But it was quite damaging yesterday, the kind of mid-cap and small-cap fall that we saw. But before all of that, anyone excited about the iPhone 15 launch here?
Excited, but,
I was calculating.
Speechless.
I was calculating. I'm now 9 models behind the latest iPhone.
Oh, wow.
No, I'm just one.
So it's time to upgrade then, yeah? Okay, what I really like about the new iPhone is that it's lighter. It is going to have now, I think, titanium instead of stainless steel.
Yeah, I heard it's made of
lighter
stuff which is, used to make spaceships, rockets, to send into space. Apparently, that's the latest thing. Because it's lighter, exactly because of that.
It's much lighter. And I think, you hold your phone for so many hours through the day. Yeah. For an iPhone user like me, I don't mind switching if it's much lighter.
No, I'm one level behind. I don't mind going 2 levels, 3 and 4, and then maybe I'll catch up with Prashant. But I just purchased the last one, so I will look forward to the launch, but I won't be on the buy side.
Okay, maybe soon. All right. But on the markets itself, things have been kind of sticky, especially in the broader markets, right?
It has. Yesterday was a bad day. And let's just actually start with that. I'll get to the Nifty, global markets, etc. But I think top of mind for people this morning is what next for the mid-cap and small-cap part of the market, which saw a first real crack of 2023. Actually, this is the largest single-day cut that we saw on the mid-cap and small-cap indices, right? Now, over 2 lakh crores in market capitalization wiped out in that space, in the mid and small cap space. As of day before yesterday, the total market cap for that space was about 60 lakh crores. You take a 3.5% cut, average cut across that AUM, and you're looking at a 2 lakh knock in the mid and small cap part of the market. And I'm not even counting lower down micro caps, etc., where perhaps there would be a lot more damage. I want to address this first up. There is talk that there was portfolio liquidation by a foreign fund, and that has caused a lot of damage, right? Without naming names, a foreign fund, there was one particular person at that fund who was running positions he should not have, maybe too aggressive. That person was let go, and then a lot of the underlying position had to be unwound and that kind of stuff. We did actually speak with a fair bit of people on the sell side and on the buy side, on the fund management side as well. And, it's very difficult to pinpoint exactly what kind of numbers somebody is running, especially in this sort of a situation. But I have to say this, that I saw some numbers being put out, which is $3 to $4 billion of portfolio is up for liquidation, etc. That, to my mind, and from the conversations I've had, that seems extremely unlikely. We are talking about much smaller numbers in terms of this particular incident, which has happened at a foreign fund. So that is point number one. Actually, if you take a look at, yesterday's net figure, which was the FII net sell number, which was about 1,050 odd crores. It doesn't add up, right? If you had that kind of liquidation across the board from a single entity and that to an FII, it would have showed up. The numbers would have swelled up a little bit more, which was not the case. Actually, you could look at the gross number as well, and that will give you a similar kind of picture. That is not to say that, the bulk of the damage is because of this particular incident is done. It is possible that there perhaps is more selling and not everything got done in one single day. But that is what the point I want to make is it is just one of the factors, right, at the margin, which perhaps could led to incremental weakness yesterday. So, to my mind, perhaps we could see weakness for a few more days in the mid and small cap part of the market. But I think I said this yesterday while we were in that 3.5-4% fall, that maybe what we saw, the single day cuts that we saw, that perhaps is the worst that the market will see in this particular phase. I'm talking about the 4% cut of the small cap index. Will we see another 4% down day? If fingers crossed, I think unlikely. But we could see a few more days of weakness here. So the advice is very simple. If you're invested in mutual funds, if you and fund structures, etc., where there is a professional fund manager at the helm, hold on to those schemes, hold on to good quality stocks, etc. No problem. But if you are levered, and there is of course F&O on one side, there is also cash leverage. I mean, people have made money. Their sort of demat cash holdings have gone up quite a bit, and brokerages, etc., offer leverage on that, 2x, 3x leverage on that to buy stocks in the cash market as well. And that has become pretty large as well. So reduce all of that to manageable levels. I mean, that is the first thing. It's not just, I have to say that a lot of people, big investors, long-term investors, I know so many who also trade on the side, but the first thing they will all tell you is during periods of volatility, etc., cut leverage, get out of positions you're uncomfortable with, you're not holding. This is not a single day game, and you can always get back in when you feel more comfortable. So that's the advice here as far as the mid and small cap part of the market is concerned. Now, having said all of this, let's come to the global scene. I'll kind of wrap up with the Nifty, Bank Nifty levels. So overnight session was weak from the global perspective. The Nasdaq was down about 1.04%. S&P was down as well. The big headline is oil, right? I mean, oil prices last night inched up to almost $92 a barrel. And OPEC Plus basically saying that in the fourth quarter, global oil inventory deficit will be the highest they've seen in over 10 years. Now, that is quite something. Which, does it mean that there is more to go in oil? The consensus is no. But we'll have to watch because the price is telling you something else. The dollar index has been the other pain point. It got to about 104 point something. It's now at 105 point something. It's now at 104.5 or so. So that is the other indicator. This is looking a little more manageable, but oil is a big worry. I don't think one can sort of negate that. Now to advice for the broader market, and we've been kind of saying this for the last couple of days, perhaps, and so many people veterans who've come on the program have also said this, perhaps some move to large caps, incremental risky positions in the mid and small caps, which have made you money so far, perhaps start to move some of that into the large cap space, where there is a clear case also because of valuations, etc., which we can discuss later on. In the very near term, these are daily levels we put out. Nifty's first target, daily very near term, Nifty's first target, I would still say, and this is the same I put out yesterday as well, 19,350. That is the equality level of the previous last two moves, and it gets us to a number which is, 20,350, beg your pardon, not 19,350. We need to change that. Supports come in at 19,922 and 19,794. Bank Nifty resistance is yesterday's high. The high was 45,894, and supports for the Bank Nifty come in at 45,359 and 45,063 as well. So broader markets, I think, perhaps at least in the near term, in the medium term, the place to be. And I would be very surprised if the large caps universe does not outperform after the huge outperformance from the mid and small cap over the last 3 or 4 months or so. Sonia.
Absolutely. So you summarized most of it. I just wanted to take a few points on board. One is, of course, the price action is crucial in the mid and small cap space, right? After the kind of damage that we saw yesterday. So perhaps the best thing to do would be to be a bit cautious in the mid and small cap space. Remember, it recorded its biggest single day fall of 2023. So that's that. There was a large FII sell figure as well. FII sold over 1,000 crores in the cash markets yesterday, while DIs bought about 259 crores or so. Now, everyone knows that, you should be slightly wary of mid and small caps, but I'm watching out for the Nifty Bank today because the macro data was quite positive. So the CPI data in August cooled down to 6.8% from 7.4% in July. It's still above the RBI's comfort zone, but nevertheless, cooling of inflation is something that will perhaps help the constituents from the Nifty Bank. So I'm watching out for that very closely. In the US markets, not too much happened really. So you had, it was largely unchanged. In the US as well, the expectation is that the consumer price index numbers will be out. The CPI data will be out later today. So all eyes will be on that. In our own markets, in terms of individual stocks, there's been a lot of primary market action. So today you have RR Cable, the IPO that opens today. That's going to be an interesting one because the company has about 7% market share in the cable and wires industry, and it's seen a very good revenue growth. The top line compounded growth over the last 3 years has been in excess of 31%. So I'm watching out for this very closely. And of course, as we've been pointing out, crude continues to be a headwind. It hit that 10-month high of $92 a barrel. But the moot point is that the kind of sell-off that we saw yesterday, I don't think anyone on the street expected the ferocity of that. So it just goes to show that markets tend to be a leveler. You know, just when you get into this euphoric level, the market sort of comes back and brings you, keeps you in check. So I think it's better to just be a bit cautious in the broader market.
You know, Sonia, I'll put it in cricketing parlance, actually. It's like a batsman out there who is in fine form. But you need to hit every ball on its merit, right? You can't believe that every ball can go out of the park.
Absolutely.
And I think that's the reason why, in fact, with good reason, we saw a pullback in the mid and the small cap space. My only advice with regard to the mid and the small cap space is be careful of illiquid names, because we have seen a lot of those illiquid names move up. So that's one very, very important point. Watch the free float. And if you're seeing some of these stocks really surge up, maybe you want to clean up some part of your portfolio. Well, in terms of cues to track today, the uptrend is pretty much intact on the Nifty. Till that 19,850 odd mark does hold on. Yesterday was a good wake-up call, because otherwise you're coming in there, you're buying the Nifty and making money. Yesterday, yes, we recovered from the low point of the day, but it was a good wake-up call. It's going to be a bit of a test for the broader markets, though, because we saw yesterday there was some selling. I'd like to see what happens on the second day for the next few sessions, actually. And the Nifty IT index has been in a bull market of its own. But overnight, we had a lot of tech-related stocks, whether it was Oracle and other tech-related stocks that were under pressure. And the Nasdaq, after a while, underperformed. So it's going to be a test for both those two indices. The bulls, well, they lean to the Nifty Bank as the Nifty Bank plays out the weekly expiry. And that was showing signs that it wants to move higher, wants to move towards that 46,000 odd mark. What do the FIs do? They added long positions yet again. They added close to around 10,000 contracts. Now their long positioning moves to around 63% approximately. I'm just reading the options data, and the highest open interest on the call side is at around 20,100 call. On the put side, it's at around 19,900 put. The premium on both of them is around 30-35 rupees approximately. So there will be some kind of strategy that's playing out there, which brings us to the levels. Yesterday's high, that's going to be a near-term resistance level. 20,100, 20,150, since the highest open interest is at around the 20,100 call. So we'll keep an eye out on that mark. Support, though, as I said earlier, 19,850, you watch out for that level. The Nifty Bank, it plays out weekly expiry today. We have seen writing at around that 45,600 call. The premium yesterday went to around 250, and then it came down to around 100 rupees approximately. So that the level out there we're looking at is yesterday's high. Around 45,800, 46,000 appears as a bit of a congestion zone. The GIFT Nifty is suggesting we start off flattish. The Nifty is in an uptrend. Be a little bit wary in terms of what you're doing in the mid and the small cap space. That party is getting a little bit interrupted, at least for the time being.
Well, absolutely. Protect what you've made, protect and be in the right names. I mean, I think that's the only thing. Take a harder look at what has happened. Extremely important to do that at a point like this. We'll take a quick look at what's coming up here in the next half hour of the show before we go any further. So we've got Global Opinion coming in. Dean Kim and William O'Neill will join us. For that, we'll also have CNBC TV18's list of top stocks for the day at about 8:30. Our market expert, Hemang Jani, will be joining in.
Okay, let's begin the day with some views coming in, shall we? After the kind of sell-off that we saw in the mid and small cap space, what do you do this morning? Mahesh Nandurkar of Jefferies says that the Jefferies Asia Forum 2023 in Hong Kong saw participation from a group of 15 companies from India, including 11 Nifty companies. The FPI level of excitement on India is high, though valuations are an issue. Cyclicals continue to see strong demand conditions across industrial and property sectors. Financials are seeing moderation in margins, but confident on asset quality. Consumer commentary is mixed, with rural likely to improve. In the IT sector, the overall demand is still weak. They remain overweight on cyclicals.
Okay, well, last evening we also got the August inflation data that came in at about 6.8% compared to the 7% estimate. Food inflation is also cooled to just below 10%, while industrial output accelerated. That's for the month of July, by the way, by 5.7%, which is above expectations. So, some of the macro kind of data points also coming through. Samiran Chakrabarti of Citi actually is weighing in, and he says that the CPI data would vindicate the Monetary Policy Committee's stance to look through the supply-side inflation shock. In the RBI's October meeting, he expects the MPC to acknowledge these positive developments and tone down its inflationary concerns. However, he adds it might be too early to signal any monetary easing given weather-related risks.
All right, let's also find out what's happening in the currency market, shall we? Yesterday it was a choppy day of trade, but the rupee has been hovering around that 83 to the dollar mark. For today, Abhishek Goenka of IFA Global says rupee has been under pressure on account of a weaker yuan, higher US Treasury yields and higher crude prices. However, the RBI has been intervening with a lot of intent, and that has deterred speculators from building speculative shorts in the currency market. The rupee has therefore been outperforming amidst broad dollar strength. He expects the rupee to trade sideways in the 82.40 to 83.70 range over the medium term.
Okay, well, on bonds, Neeraj Gambhir weighs in of Axis Bank weighs in by saying that bond yields hardened as US Treasury yields rose on strong economic data and higher crude oil prices following decision by Saudi Arabia and Russia to extend voluntary production cuts till the end of the year. However, news that RBI has inquired the market to assess the impact of allowing settlement of government securities on Euro calendar platform led to a rally in GSEX. Market remained cautious ahead of the India-US CPI prints. He expects the 10-year to trade between 7.18 to 7.28% this week.
Well, a lot of stock-specific action to track for you. Get to that in just a bit from now in our special Top 10 segment. But let me list out the stocks that we're looking at. Phoenix Mills, Dixon Technologies, Jai Bharat Maruti, KEC International, RITES, GE Power, Texmaco Rail, NTPC and L&T Finance. All of them on the back of positive news flow. While on the flip side, Greenply Industries, that's a stock that's likely to open up in the red.